So welcome again. We are going to proceed, and this time round we are doing question number 2, May 2021 ATD Introduction to Financial Accounting paper. So question 2, identify 4 errors that cannot be revealed by the trial balance. Identify 4 errors that cannot be revealed by the trial balance. There are so many, but for the sake of it, we'll just mention the 4 that the examiner is interested in. So identify 4 errors that cannot be revealed by the trial balance. Remember, a trial balance is used to check the arithmetical accuracy of your postings in the ledger books. So we transfer the information from the ledgers to the trial balance, debit, credit. The debit and the credit are supposed to do what? To balance at the very end. They are supposed to balance. Debits and credits should be equal to show accuracy in arithmetical and just in your postings. Now, sometimes they will still balance, though there are some errors. You know, the debit and the credit will balance, though errors exist. But sometimes the errors will be disclosed. So what the question is asking here is you identify 4 errors that cannot be revealed by the trial balance. What that means is that the trial balance will still balance at the very end. The debit and the credit will still balance, though there exist some errors. So what are these errors? Number 1, errors of original entry. Errors of original entry. So if these errors were made in the original books, then they will go all the way up to the very end without being, the trial balance will not be able to detect. Trial balance will detect when the debit and credit are not agreeing. But if we post the same figure we post on the debit side is the same figure we post on the credit side, then at the end of it all, it will still balance. The figures, the debits and the credit will be the same. And so the trial balance will not have revealed the error because the error was made in the original book of entry. When I talk of original books of entry, I'm talking about things like the sales day book, the purchases day book, the petty cash book. You know, those are original books of entry. The cash book itself, the return inwards, those are original books of entry. And also the source document. The error could have been made in the source document. So if the error has been made in the source documents, the trial balance might not be in a position to reveal that error. So give me the example here possibly is in the receipt book, or rather let's talk of sales. Instead of posting 10,000 shillings, you posted 1,000 shillings, so that when it comes to, you know, subjecting this to further treatment, you will be using 1,000 instead of 10,000. So like if it's a normal sales transaction, we will credit sales with 1,000 and then debit either cash or the data with 1,000. That way, you see, we have credited sales with 1,000, we have debited the customer or the bank with 1,000. So debit is 1,000, credit 1,000. They will balance. But is 1,000 the correct figure? No, the correct figure was 10,000. So there is an error, but the trial balance will not be in a position to reveal. So these are errors that are done in the original books of entry, and so they are transferred to the trial balance, and the trial balance will not be able to detect because the debit and the credit side are the same. Then you also have errors of error of omission, and this where you completely leave out a whole transaction. You completely leave out a whole transaction so that you don't post a debit, you also don't post a credit. So there will be an error. The error is that you have left out a whole transaction. But since you've not inflated the debit side or inflated the credit side or deflated any of them, you've not affected the debit and the credit side, the trial balance will not be able to detect. It will still balance. Unless if you end up deflating or inflating one of the sides, debit and credit, that's the time the trial balance will detect that error. But in this case, you've left out completely the whole transaction. If you leave out that one entry or one you've not posted on the credit side, then the trial balance will detect that error. But if you leave out the whole, you've not debited, you've not credited, the trial balance will not be in a position to detect that kind of error. We also have error of, or rather we can talk of duplicating errors, errors of duplication, duplicating errors, where you post and again you post. So you post like one transaction twice. So you debit 1,000, credit 1,000, and again erroneously you debit the same transaction 1,000 again, 1,000 again. So you post twice one transaction. You post one transaction twice, and because the transaction is correct, it's just that you posted twice. You know, the debit and credit side will agree. Why? Because the same amount you posted to the debit side is the same amount you posted to the credit side. And the trial balance basically is used to check using the totals on the debit and the credit side. Since you posted the same amounts twice on the debit side and also on the credit side, it will be the trial balance will not have anything to disclose in terms of differences because they are the same figures. So here you posted the same transaction, posted same transaction twice or thrice, or but let's just talk of twice because it's duplicating. So you posted the same transaction twice. It will not be disclosed by the trial balance because the totals on the debit and the credit will still balance. Then you have errors of principal, and this where the basic, the foundation of accounting is not followed. Foundations of accounting are not followed. Principle, foundations of accounting are not followed. For example, are not followed. You post, basically it's you post a transaction on a completely on a wrong account, but the same class. So for example, is it really the same class? Let me see. It might not even be the same class. Let's look at an example. We are talking about assets are debit entries, expenses are debit entries. So you post an expense in an account, in an asset. Of course, all of them are debits. Expense is a debit account, asset is a debit account. And you post an expense in an asset. For example, motor vehicle expenses. Instead of opening motor vehicle expenses account, instead of posting motor vehicle expenses to motor vehicle expenses account, you post motor vehicle expenses to motor vehicle account. You see, that's an error of principle because these are expenses should go to expenses. It should not go to assets. But because all of them are debit accounts, there will be no problem in the trial balance so long as you also have an equivalent credit account which is correct. So you see, we might have made an error here, posting an expense to an asset. But the trial balance will not be able to detect that error. So errors of principle, where you don't follow the foundations of accounting, you basically, there's something about the class and the accounts. You post a transaction in the wrong class, wrong class of accounts. Instead of posting an expense to expenses account, you post an expense to an asset account. That's a wrong class. That's what we are talking about. Then let's talk about the next one is error of commission. Error of commission, and this is the same class. These are different classes, but here we are talking about same class. Like if we are talking about debtors, instead of posting a transaction to T Omondi, it is T Omondi you are dealing with, you erroneously post it to P Omondi. No, these are two different people, but the same class. All of them are debtors. So instead of posting a transaction to T Omondi, instead of debiting T Omondi, you debit P Omondi. And of course, there is the respective credit account the other side. So the problem is here. Instead of posting to T Omondi, you ended up posting to P Omondi. Will the trial balance detect that? No, because all these are debit accounts. So long as you've debited and you've credited, the trial balance will be okay. But within the debit account, there is a problem. Instead of debiting T Omondi, you debited P Omondi. So this is posting. These are wrong transaction of the same class. Wrong transaction, same class. This is wrong transaction, different classes but same account. No. Not really account, different classes. You can see expenses and assets, but this one is same class, debtors. We also have errors of transposition or transposition errors. That's where you change the figures. Instead of writing 947, you write as 974. And so long as you are going to debit 974 and also credit 974, there's no problem. The trial balance will balance. But remember, the original figure was 947. So there's an error, but the trial balance will not detect that error because the debit side in the trial balance and the credit side are agreeing with the new erroneous figure, with the new figure which has an error. The original figure 947. The figure you've used 974, and then you've debited 974 and credited 974. So the debit and credit side of the trial balance will agree, but there is an error because you picked the wrong figure. Transposition is basically changing those, changing the wordings, changing the figures. That is error of transposition. So I think these are enough. You might want to. There's also another one which we are almost forgetting. Maybe we just mentioned error of complete reversal. Error of complete reversal. Error of complete reversal. That's where what is supposed to be debited you credit, and what is supposed to be credited you debit. You completely exchange the debit credit side. Whatever that was supposed to be credit, you debit, and whatever was supposed to be debited, you credit. So that at the very end, the debit and credit will still agree, but you have changed, you have reversed the entries. They are wrong. But since we are testing on the agreement of the debit and credit side, they will agree because you've completely reversed the two. What is supposed to be on the credit, you've debited. What was supposed to be on the debit, you've credited. So the trial balance will not be able to detect that error. So how many errors are these? I know my notes are very poor, but since you've understood and you know the answers, those are the errors. Identify 4 errors that cannot be revealed. The question is identify, though the next question might be explain. So these are the errors. I've given you, I think, 7. Go and find the accurate meanings of all this. But these are the errors which cannot be revealed by a trial balance. So let's look at the part 2 of this question. Let's look at part 2 of this question. The totals of the draft trial balance at Congolo as at 30th September 2020 did not balance. The difference was posted to the suspense account. Draft final accounts were prepared which showed a profit of 6126,480. Subsequent investigation revealed the following errors. One of the pages of the sales daybook totaling 3080 had not been posted to the sales account. Year-end inventory sheets had been overcast by 66,000. Discount alert column in the cash book had been undercast by 54. Last page of the purchase daybook totaling 437.40 had been posted to the purchases account as 434.70. This is the transposition error that we are talking about. You can see 434.70, 437.40. It's a transposition error. Change of figures. The figures are interfered with. Okay, now we can proceed. An invoice of 38.40 was correctly entered. An invoice of that was correctly entered in the sales daybook but posted as 58.40 in the customer's account. Yeah. An entry in the purchases daybook for 9.20 had not been posted in the supplier's account. An error had been made in balancing of the petty cash. The correct balance was 15,000 and not 1,500. And this could be an error of the original entry. And then loan interest paid amounting to 30,000 was posted to the loan account. What are we required to do? Come up with a journal entries to correct the errors enumerated above. So let's straight away go to the job, start the job. They have already given us the job, so let's go to the job straight away. Journal entries. A journal entry will have the debit side and will also have the credit side. And then of course you have the particulars here. You need to draw, but I may not draw because of no. Okay, so let's move. So unfortunately, in this question, they have not given us the suspense account, so it may not be that straightforward because we've not been given the suspense account. If we will have been given, we will have, known if we are on the correct track or not. So this one will just have to be very keen and make sure you get it right. Draft final accounts were prepared which showed a profit of this. Subsequent investigation revealed the following errors. One of the pages of the sales daybook totaling 308 had not been posted to the sales account. One of the pages of the sales daybook, sales book, totaling 308 had not been posted to the sales account. You simply post. It was not posted. So what do? We post. So sales is a credit account. So what do? We debit the suspense account because the mistake only happened in one account. So any time mistake happens, it affects only one account. The other account is always suspense account because you can see it. Suspense account here has not balanced. So it means their explanation is on the suspense account. So we debit suspense account and then we do the right thing, which is posting this transaction to the credit side of the sales account. Sales account. How much? 308,280. 308,280. Like that. So one of the pages on the sales totaling 308 had not been posted to the sales account. We simply post to the sales account. Sales account is a credit account. That is the transaction. So we can talk of the narrative. Narrative, you simply say a record of, can say a posting of posting of an omitted cell, account. So simply show that it was a posting on an omitted sales account. One of the pages sales book had not been posted. Yeah, we had omitted, so we are posting it. That's it, though we are done. So possibly we need to draw a line to distinguish between this one and the next one. All these things are supposed to be in lines. So let's just assume this line here. Oh, that's why I didn't want to draw the lines. So that's number one. Let's look to, now number two now will be the year inventory. The year-end inventory sheets had been overcast by 66,000. The year-end inventory sheets had been overcast by 66,000. So journals are used to correct errors and to post anything in your inventory. Yeah. So the year-end inventory sheets had been overcast by 66,000. So what are we supposed to do? It had been overcast, so we reduce. So we'll say debit. Inventory sheets had been overcast. Inventories are debit. So because they had been overcast, we are going to credit. So we'll debit the suspense account. Debit suspense account with 66,000 and credit the inventory account. Inventory account with 66,000. So this is to correct an overstated inventory account. Inventory account, like that. To correct an overstated inventory account. So the year-end inventory sheets had been overcast by 66,000. We credit the inventory account to correct the overstated inventory account, like that. The discount allowed column in the cash book had been undercast by 5,400. Discount allowed is debit, so it had been undercast, which means we are going to increase it by the 5,400. So since it's a debit account, we are going to debit it again with the 54 which is missing, which was undercast. So we'll say debit discount allowed account, debit discount allowed account 5,400, and then we credit now the suspense account. It's not mandatory for you to keep on writing this. You can as well do away with this. Debit, credit, narration, you know. Debit, credit, narration. This one not a must. After all, it's not a must because they are here, debit and credit. So suspense account 5,400. So you simply say to correct an undercast. Undercasted and undercast in discount allowed. We had undercasted, we had left out some figure, so we are simply posting it. So discount allowed account 5,400 debit, then we credit suspense account, like that. Let's go to number 4. Number 4. The last page of purchases daybook totaling for 3740 had been posted to the purchases account as 430 for 70. 430 for 70. So what's the difference here? We need to know the difference here. So this is 430 for 70 minus 430 740. That gives us 270. So 270 is the difference. So the last page of purchases daybook totaling for 3740 had been posted to the purchases account as 430 for 70. Yeah, purchases is supposed to be a debit entry, so it means it was undercasted. So we simply debit the purchases account. So we debit purchases account with 270 and credit the suspense account. Suspense account with 270. And then we say to correct an undercast. To correct an undercast in purchases. To correct an undercast in purchases. To correct an undercast in purchases. Bit tired now. Okay, let's proceed before I get tired. This is the last page of purchases daybook totaling 430 had been posted to the purchases account as 430 for 70. Good, 430 for 70 instead of 430 740. So the difference to 70 we also post it, and because purchase is the debit account, we debit the figure and then credit the suspense account. An invoice of 3840 was correctly entered in the sales daybook but posted as 5840 in the customer's account. An invoice of 3840 was correctly entered in the sales daybook. No problem. Posted in customer's account as 5840. So it's the customer side that has the problem. It was posted as 5840 instead of it was posted as 5840 instead of 3840 to the customer's account. So the customer in this case is the debtor. So what are we doing? We want to reduce, the debtor is a debit account. So we want to reduce that amount by how much? The difference is 2000. We simply credit the debtor's account to reduce. Debtors has been overcast by 2000. So and debtors is a debit account. So we credit to reduce the overcast. You know. So when you credit 2000 debtors account, you see this is how it is. Debtors. This is the debtors account. We posted 5840 and we're supposed to post 3840. So this is debit. So we are going to credit. Then what will be remaining is now 3840. That's what we are talking about. So we do what? We come here, we number 5. We debit suspense account. Suspense account. How much? 2000. And then credit debtors account. Debtors account 2000. And then we say to correct an overcast. Just like that, to correct an overcast. Sorry. So then, let's move to number 6. An entry in the purchases daybook for 920 had been posted to the supplier's account. An entry in purchases daybook of 920 had not been posted to the supplier's account. We simply post. Now the supplier is a creditor. He has sold goods to us on credit. Supplier is a creditor. Anything credit is on the credit side. This is a creditor on the credit side. So we are going to credit his account. So that means that we debit suspense account, and credit creditors account with the 4920. And then the narration, we can simply say posting a credit account omitted. Yeah. An entry in the purchase daybook of 920 had not been posted in the supplier's account. Creditor posting on a creditor's account that had been omitted. So 4920 on the credit side, because creditors are a credit entry, debtors are a debit entry. Now the next item, number 7, an error had been made in balancing of the petty cash book. To correct, the correct balance was 15,000 and not 1,500. So instead of writing 15,000, we wrote 1,500. A difference of 15,000 minus 1,500 is 13,500. Petty cash is a debit account. It's an asset. So we simply debit this so that it can go back to the 15,000 that is now the correct figure. So number 7, debit petty cash book. We said we can leave this one out. So petty cash book with 13,500, the difference, and then we credit suspense account with 13,500. So this is to correct an undercast figure. Just like that. That will be enough. Then we go to number 8. Number 8 is loan interest paid amounting to 30,000 was posted to the loan account. Loan interest paid amounting to 30,000 was posted to the loan account. This one is quite tricky. Loan interest paid amounting to 30,000 was posted to the loan account. Loan interest. Now this most likely is now the error of principal. This is the error of principal. You can see loan interest is this is an expense, and the loan is not an expense, it's a liability. So there's a big error here. Not even principal. So loan interest paid amounting to 30,000. Loan interest, it's supposed to be a debit entry. Loan interest 30,000 was posted to loan account. Instead of posting it here, it was posted where? Here. So what do? We first of all, we credit this to reverse this effect, and then we now post it here. So what are we going to do? Debit loan interest account, credit loan account. Debit loan interest account, credit loan account. Yeah. So 3,000. So we remove from the loan account and then we post to the right account, which is loan interest account. Yeah. And because loan interest is a debit, we debit. And because loan account is we had debited it, so we credit to remove the debit so that we can now transport. So this one will not affect the suspense account. We have the two accounts here. So to simply correct a wrong entry. So we are done. Those are the ledger entries, the journal entries to correct the enumerated errors. So we have already corrected all the 8 errors. You can see they are here. Those are the corrections that the examiner so badly wanted. Now let's look at the next item. Suspense account showing the disposal of the original difference. Now what was the original difference? That's what we were talking about. We don't know the original difference. The question has not been good enough to tell us the original difference. So suspense account. Normally we'll start with the balance carried down, whichever side. It could be on the debit side or the credit side, we don't know. Now this question has not even told us whether how the total balance, by what figure the total balance is agreed. Totals on the draft balance at Congolo did not balance. The difference was, it has not said anything. So what we are going to do is just to do what we are supposed to do. These are the corrections we have. So number 1, suspense account, debit. That's what we are going to do. Debit suspense account. Reason is sales 308. So we come here and we debit. Maybe we'll just leave some space for the balance carried down, which we don't know. We even don't know where it will fall. So we'll say sales account 308. I'm just following the instruction 308 to 80. Number 1, the instruction here is debit suspense account 308 to 80. What is the reason? Sales account. So sales account 308 to 80, and we debit the suspense account. You can see we have debited the suspense account. Then we go to number 2. Number 2 is again debit suspense account. The reason inventory. So suspense account 66,000. So come here, you say inventory account 66,000. I'm just following the instructions. Number 3, discount allowed. Again, this one now is credit. Credit suspense account 54. The reason is discount allowed 54. So this is the credit. So you just say discount allowed 5,400. Next, credit suspense account again, purchases to 70. Purchases to 70. To 70, we've credited the purchases, the suspense account. We've credited suspense account, you can see. Number 5, debit suspense account 2,000. The reason is debtors. So debit suspense account. The reason is debtors 2,000. Next, Debit suspense account, creditors 4920. Debit suspense account, creditors 4920. So creditors 4920, and we have debited the suspense account. I hope you are seeing how we are reading these things. Then number 7, credit suspense account. Reason is petty cash 13.5. So petty cash 13.5, and we credit this account 13.5. Like that. Number 8, there is no suspense account, so we leave it at that. So at the very end, after all these corrections, what we know is that the suspense account should balance. It must balance if we have corrected all the errors, because the trial balance must balance. The trial balance was not balancing because of the suspense account. Now we have the suspense account. We've identified all the errors, and we have even corrected them. So let's get the totals. This will be 308, 308, 280 plus 66,000 plus 2,000 plus 4920. 381, 200. 381, 200. And the other side also now, because this figure is definitely the highest one. 381, 200. Then we'll also want to check on the, now this will be 5,400 plus 270 plus 13,500. That gives us 19,170. So minus 381, 200. This gives us 362,030. So 362,030. So this was the balance carried down. The reason why the assumption here is that the suspense account didn't balance by 362,030, and then these are the errors that we discovered, so that at the very end it balanced. This is the assumption. If we had been given the figure, we assume that this would be the figure they would have given us as the reason why the trial balance did not balance. That's why we are putting it here, so that we start from there and then do the corrections, and at the very end it should basically balance. So that's how it's supposed to be. This is not balance carried down, this is balance brought forward. Balance brought forward from actually the reason why the trial balance was not balancing. 362,030, and then these are the corrections, so it balances at that. Now maybe something, let me just confirm something about the year end inventory sheets had been overcast by 66,000. The year-end inventory sheets had been overcast by 66,000. I think there could be something here. Year-end inventory sheets. You know, normally the year-end inventory, we don't include that in the trial balance. So maybe we'll just correct, but we will have to exclude it from here, so that we don't show it here. That one is subject to, you might want to confirm, but normally we don't include year-end. We don't include the year-end inventory in the trial balance. It's normally part of the additional information. So that if we go with that argument, then it means these totals might not be actually correct. So let's remove it. Sorry for that. Let's just do away with that, because normally year-end will not appear in the trial balance. So this will be 308, 280 plus 2,000 plus 4920. So that gives us 315,200, and that's why it's very important. These people, at least they will have given us the figures. It will have helped direct us. 315,200. So then the difference will be how much was that figure? That was 54 plus 270 plus 270 plus 13,5 to give us 19,170 minus 315, 200. This gives us 296,030. So this will be 296,030. But that is subject to confirmation. 296,030. So balance brought forward, we assume now to be 296,030. I've done away with the inventory. Assumption here being that this is close of this financial year. That is the assumption. And the closing inventory are not normally included in the 12 balance. So it cannot be one of the reasons why the 12 balance is not balancing. That's why we've gotten rid of it. But of course, correcting an error, no problem. It will just be corrected. So this is how it will look like. Our suspense account will look like that. So we assume the figure did not balance by 296,030. Okay, let's look at now the last part. Statement showing the corrected net profit. Statement showing the corrected net profit. So here we have net profit as at that particular date. So net profit. These are books of who? Congolo Limited, 30th September 2020. In fact, that's where we are supposed to start from. Congolo Limited. Congolo Limited. Corrected statement of income statement. Corrected income statement for the year ended 30th September. For the year ended 30th September. So, what do we have? Now we'll have net profit. Net profit was 2196 something, 6126 for 80. 6126 for 80. 6126 for 80. So you can choose to have here shillings and shillings. Good to have two columns here. So net profit, that is the figure, 6126 for 80. Then now we look at the effect of some of these changes. Like the first one. One of the pages of the sales day book, total and theory, had not been posted to the sales account. So you see this one will have the effect of increasing the net profit. You had not posted a sale. So when you post that sale, it will have the effect of increasing the net profit. So we simply say add sales. We add the sales that had not been posted. How much was that? 308. 308 to 80. So 308 to 80 sales which had not yet been posted. Then we look at any other thing that will have the same effect of increasing, which will have an effect of increasing one of the pages, that one you are done. The year-end inventory had been overcast by 66,000. What is the effect of overcasting year-end inventory? You know, year-end inventory is found on the cost of sales. So the year-end inventory, what happens is this. Let me just do this, use this as my work. We have sales, then we have cost of sales. Cost of sales. Cost of sales, you have opening stock plus purchases minus closing stock. So if this closing stock has been overcasted by 66,000, you can see it will have the effect of, let's just see, if opening stock is 1,000 and purchases is say 3,000, and this one is 500. The effect, what will be the answer? 4,000. This will be 3,500. And if this is overcasted, I want to show you the effect of overcasting to 1,500. What is the effect? The effect will be 4 minus 1,500, which is 2,500. So increase in cost of sales has the effect of reducing. It reduces the cost of sales. increase when we overstate cost, or when we overstate closing stock, we are reducing the cost of sales. And when we reduce the cost of sales, what is the effect on the net profit? Now let's look at, if the sales was 10,000 minus 3.5, the net profit will be 6.5. If the sales is 10,000 less 2.5, the net profit will be 7.5. So what does that mean? That this means that that when we inflate the closing stock, we reduce the cost of sales, and when we reduce the cost of sales, we are increasing the net profit, or the gross profit, which of course will have the effect of increasing even the net profit. So now what we are supposed to do is to less the difference, which is possibly now in this case 1,000, so that we go back to the original profit. So we are supposed to less the 66,000. Now here we say less the closing stock, increase in closing, overstated closing stock, which is 66,000. So we are going to less that one. And then now let's look at the other one. The discount allowed column in cash book had been undercast by 5.4. Discount allowed column in the cash book. Discount allowed column in the cash book had been undercast by 5.4. Of course, this will have the effect of reducing we need to return it back. So it will be increasing the expenses. When it increases the expenses, it reduces the net profit. So this will have the effect of reducing the net profit. So less 5.4, discount allowed, 5.4, and this is discount allowed, discount allowed. Then we move to the next one. That's how we go about it. The last page of purchases day book had been posted to purchases account as 430 470 instead of 430 740. So this was an undercast. Let's again look at the effect of an undercast. Let's come back to our formula here. Purchases. Instead of putting 3,000, 1,000, instead of putting 3,000, we put 2.5. Let's just see the effect of an undercast. This is an undercast. Instead of 3,000, which is now the normal figure, we put 2.5. And then, of course, this one now we hold constant. So this will be 500. So this will give us 3.5 minus 5. This will give us 3,000. So an undercast in purchases leads to an undercast in cost of goods sold. So then 10,000 minus 3,565. This one 10,000 minus 3,000. This is 7,000. So undercast in purchases inflates the profits. Are you seeing? An undercast in purchases inflates the profits. So what are we supposed to do? Reduce the profit by that amount. So we reduce the profit by that amount, which in this case is 270. So this is undercast in purchases 270. I think it was an undercast. Let's just confirm. The year 430,740 had been posted to purchase account as 430,470. Good. So we pick it at that. It was actually an undercast. Okay. So the next item is where are we here? An invoice of 3840 was correctly entered in the sales day book but posted as 5840 in the customer's account. Sales day book was correctly entered, so this will affect the data, which is not anywhere in the net profit. An entry in the purchases day book of 4920 had not been posted the supplier's account. We post the supplier's account. That will affect the balance sheet. Remember, in our sales, in our purchases, we had captured it correctly. So this one will not affect. An error had been made in the balancing of the petty cash book. The correct balance was petty cash book not in the income statement. It is in the balance sheet, so we'll leave it. Loan interest paid amounting to 30,000 was posted to the loan account. So this one will have the effect, this one will affect the P&L. So loan interest paid amounting 30,000 was posted to the loan account. So it will have the effect of increasing the expenses, hence reducing the losses, hence reducing the net profit. So it will increase the expense because loan interest paid is an expense, is an expenditure. So we'll capture it as that. So 30,000 it will have the effect 30,000. If we increase the expenses, we reduce the net profit. So it will have the effect of reducing the net profit. And because we are done, I think we are done. Yeah, we are done. And because this was the only additional that we have, it's important, it's prudent that we put it here, 828 and not here, so that now we can get the total here, and the total here will now be 66,000 plus 54 plus 270 plus 30,000. That gives us 101,670. 101,670. So let's get the total. This will be our corrected net profit. So let's get the total here. This is 6126. 480 plus 308, 280 minus 101, 670, 6333, 090, 633090. So that's where we are. Thank you. 63. That will be our corrected net profit. After all these things, our corrected net profit will be 633090. So that brings us to the end of this question. 633090. That brings us to the end of this question. So thank you. Let's meet in the next question.